Welcome, ladies and gentlemen. It's Edelmetall as a precious metal fair in Munich, and with me now is here for the first time Granada Gold Mine. And Frank Basa, who is the president and CEO, wants to give us an insight into his company. Frank?
Well, thank you very much.
Great to have you here.
Well, thank you for inviting me. Thank you very much.
Thanks for taking the time. Granada Gold Mine, maybe can you give us a short overview? What is the company about? Where are you working?
The Granada Gold Mine is actually a former producer. It's located on Cadillac Trend in northern Quebec. We've drilled a resource out. Our maiden resource was 2.6 million ounces at 1 gram. Now we've changed that direction. I think we'll develop it as a high-grade mine. We're looking at about 1.2 million open pittable at 1 gram, and we're going to try to operate like they operated in the past. They operated the mine at 8 to 10 grams a ton. So we've released some drill results this year, and the majority of the drill results are within that range of 8 to 10 grams a ton.
Fantastic, great. So if I listen to you, it sounds to me like that you really want to go in production, right?
Yes.
That's the target.
That's the target. What we did was when the market crashed, we didn't do any exploration, went for our permits. So we got our permits to go into production. It took us 2 years, $6 million. So we're actually production ready, shovel ready, as we say. But we're going to change the deposit. Like I think we'll have better success developing this as a high-grade mine in the 8 to 10 grams a ton.
Okay, super. So what are the next steps? What do you have to do? Like a feasibility study, or what's the take on it?
Right now what we've done is we got about 100,000 meters of drilling planned over the next 3 years. In the interim, of course, we'll do a few resource calculations, a few 43-101s, and then, of course, we're looking at putting it in production. So more than likely in a 3 years time frame, a combination of a feasibility study will be completed. A resource, maybe 2 to 3 million ounces. About 2 million of that will be probably 8 to 10 grams per ton underground. And the rest will be open pittable, about 1.2 open pittable at 1 gram.
Super. As of course you do not have the feasibility yet, but can you give us maybe an estimate? And that's not it's like a forward-looking statement, sorry for the regulators, but can you give us an estimate? What do you think this might cost as an initial capex?
Actually, we did a study. We did a PEA as an initial capex.
PEA you have already?
We've done one.
Okay, maybe we can talk on that now. Yeah.
At that time, we decided to do an open pit, 2.6 million ounces, and it was a very large mill. It was like 6,000 tons a day.
Oh, yeah.
And that kind of worked out. That was about $280 million. Now, if we do as a high-grade mine, the capex decreases significantly. And actually, a lot of things you have to look at now is also fuel costs, especially in Quebec. If you do an open pit, a quarter of our cash cost per ounce is fuel now. So ideal thing for us to make a smaller open pit, less fuel, go underground, and make it all electric.
Fantastic. When you did the PEA, you had already AISC calculation? Or does it make no sense now because you changed the whole thing?
Yeah, even the PEA, it's because when you look at it originally, $280 million for a mill, that's a lot of money for that kind of deposit.
That's crazy, yeah.
So we're looking for something a lot smaller, so of course our cap costs will be a lot smaller.
Okay, super.
Yeah.
So what is money in the bank for the work? Because you said 100,000 meters, that's a lot.
Yeah, no, normally the way we do it, we raise little money, we drill, we promote. So we have under $1 million in the bank. It's not very much. We've been fairly successful. We raised most of our money in Europe. The $1 million I just raised for Granada came out of the UK. Our last program when we raised money, we spent $60 million. The majority of the money was raised between England, Germany, and Switzerland. So we prefer to raise money here. We've been very fortunate. Our investors did very well in the last cycle. So hopefully they do well on this cycle as well.
Super. Who are the major shareholders? What is management share? Very important for us.
The major shareholders is actually my family. We own a little under 20% right now.
Oh, wow. Okay.
Well, the market crashed, so we bought a lot of shares.
Yeah.
And then, of course, we have a few core shareholders that have been with us for a while. So Friendly Hands is about 40% that is controlled. But like last cycle, when we took it up to about 100 million plus market cap, then all the New York funds came in and a lot of European people came in. And of course, if the market stayed, we probably could have been in production. But that would have been a low-grade open pit.
Okay, good. All right, super.
Thank you.
Thank you very much. That's great. And I would say keep it going. And hopefully then you will be soon in production in the next 2-3 years.
Till we
Maybe
meet
4
again.
years.
Yeah, no, thank you very
absolutely.
much.
Great, thank you very much.
Thank you,
yeah,
bye.
ladies and gentlemen, that was Frank Basa, Granada Gold Mine, the president and CEO. And yeah, you heard it, the company already spent a lot of money in exploration. The first resources are there, of course, and now they are changing the plan a little bit to bring down the capex, of course. And the next 100,000 meters of drilling, there of course also will be put it in then in the feasibility study. So check out the company. Thanks for watching us, and bye-bye from Munich.